In this presentation, we will use tax software to take a look at student loan interest and the adjustments for AGI. We will be using Lacert, which is owned by Intuit, the owner of QuickBooks. Similar process for most of the data input softwares, entering that information into the system and checking out the tax forms related to it. With regards to our income tax equation, we're going to be here looking at the deductions for adjustments to income as opposed to the deductions down here, standard or itemized deductions. You'll recall that we had some limitations on the amount that will be deductible with regards to these thresholds. So if we're up to married filing joint, $140,000 to the $180,000, it will start to phase out the deductibility of the student loan interest. And over $180,000, it would be gone altogether. And with single from 70 up to 85, it'll phase out after 85,000. It will no longer be there. The documentation we should receive is some form of the 1098E. So we'll have the 1098E reporting the student loan interest received. We can then put this information into our tax return. Remember, the 1099 to 1098E may not look exactly like this in shape and form, but it should have the label. It should be called a 1098E, have the boxes that will be in the same fashion that you can then look at the instructions for if you have any instructions or questions with them, which can be found on the IRS website at irs.gov, irs.gov. Here we are on our 1040 mock tax return for James Smith. We have the single individual. We're going to scroll down and we got the wages at the $60,000, which is lower than the threshold for single, which the lower limit is $70,000 before it starts phasing out. We're going to be considering down here line 8A, the adjustments, which will be supported by Schedule 1. Schedule 1, if we go to Schedule 1, has the additional income. We're going to be on Part 2, the adjustments to income. We're going to be considering the student loan interest found on line 20. So I'm going to jump to the data input screen from here, right-clicking on it, jump to the data input screen. This is where we're going to enter the data into Lacert. I'm going to assume we have the 1098. And I'm just going to enter the amount provided to us. I'm going to say that the amount was, let's put 5,000 to see what the cap is first. So we'll see the limit first. So I'm going to go back then to the forms. If we go back to the forms, you see that 2,500. You'll recall from our data that it's going to cap out, the max is going to be at 2,500. So no matter what the actual interest was, it's going to cap out at that 2,500. If we go back to the data input forms, and let's put it, say that on the 1098 it was 2,000, and then go back to our forms. Now we're going to be at 2,000 because we're not to the phase out limits, which would start at the 70,000. So we're not at the phase out limit that would start at the 70,000. If we were then to go back to the 1040, within the 1040, we have the 60,000 of income. Then we have the pulling over on line 8A, that 2,000, which brings down the income to 58,000. If you wanted to take a look at this in Excel, then you would do a similar process. You'd say, okay, here's the gross income line. I'm going to say in gross income that we had the 60,000 in gross income, and that's it. So that'll give us a total of 60,000 that will pull over to line 1. Now I'm concentrating on line 2, which is going to be supported by the deductions for adjusted gross income. We're considering here the student loan interest, which was 2,000. And then if I pull over back to our tax formula, you would think then that we'd have 60,000 gross income minus the 2,000 deduction gives us the adjusted gross income of the 58,000. And then we have the below the line deductions or the itemizer standards. We're taking the standard 12,000, bringing the taxable income to the 45,800. So if we double check that on the tax reform, we have the 58,000 adjusted gross income minus the standard deduction gives us the 45,800. Now the upper limit for single here is above 85,000. So what if our student is doing well, they're making over 85,000? Government says, well, you don't need your deduction for the student loan and you can pay off your student loans, right? That's what they think. So we're going to go back over and say, let's make our income then. We'll keep the 2,000 there, but we'll make our income 86,000. So we're making 86,000 back to the forms. And note, we didn't take this out of the line item for the adjustment, but we no longer have the Schedule 1 adjustments because we're over the phase out now. So when that happens, when you input the data and you say, the software didn't show it, it's not showing up anywhere. Why not? Because there's a phase out. So that's what your first thought would be, and think, well, maybe there's a phase out, and then look into why the phase out would be, or what the phase out limit is. In this case, $85,000 for the student loan interest for the single individual. Now, if you're somewhere in between that area, then you're going to say between $70,000 and $85,000, you're going to get some portion of it, which will typically let the software calculate for us. So if we go back over, we're going to say, well, what if we're making, let's say 80,000, not 8,000, 80,000. So 80,000. So we're in between here. We're going to go back over and say we entered 2,000 into the student loan interest. And if we scroll down, we're getting 666 of it. So we're going to say, all right, what's going to be the calculation there? 666 divided by 2,000. That's going to give us 33.333%. So if you were going to put something like that into your tax software, that will obviously pull over to the first page of the 1040. So we have the 80,000 and the 666. So we're going to go back over and say that the income is now 80,000. So we'll say 80,000, and then that gives us our first line item. And then in the adjustments, you may want to use the formula that was given to you. So we may want to say, all right, this was 2,000 times 0.333. And that means that in this data input field, it'll give you both those numbers. You can say, all right, there's 80,000 down to 79,334. This is going to be our standard deduction, bringing the taxable amount to the 67,134. 67,134. There's the 67,134.